Let's go ahead and watch this together.
Continues.
I've got to ask you about Palantir. You said it's the greatest investment opportunity of all time, your lifetime. The stock hasn't moved that much, though.
Yeah, well, Stuart, it's got an incredible valuation. So for a company that does $3 billion in revenue within...
Hold your horses, sir, for just a moment. The stock hasn't moved that much. I don't know. I don't understand what we're talking about. Palantir's up 158% year to date. In the past 1 year, Palantir's up 138%. On a 6 month, it's up 89%. On a 3 month, it's up 52%. On a 1 month, it's up 24%. On a 5 day, it's up 7.4. It's 7.8%. So I'm not exactly sure what he's referring to there. But that's interesting. By the way, SoFi is all of a sudden catching a bid here recently on a 5 day, 7.7% up on SoFi there. But let's get back into this. That was just interesting about like what?
Yeah, well, Stuart, it's got an incredible valuation. So for a company that does $3 billion in revenue with an $80 billion market cap, it's expensive.
Yeah, very.
But the way you have to think about it is, I'm thinking of more of it like a Tesla. So if you could have bought Tesla 7 or 8 years ago, that had an astronomical valuation because of what lies in front of it. So the addressable market, the software services it could cover, is somewhere in the hundreds of billions of dollars. So between 100 and 200 billion. So this company's revenue over the next 5 years, 10 years could grow 5x, 10x, 20x, 30x, because it's the software that sits at the fulcrum point of artificial intelligence. So you're building up all this firepower and all this computing power with your NVIDIA chips and your Amazon cloud, your Microsoft cloud. To actually implement it in your business, you need software that's excellent. Nothing like Palantir exists.
Real fast, before the market.
I think this rally continues.
I've got to ask you about Palantir. You said
I think he put that very well in regards to Palantir. And he also mentions about valuation, which is why everybody goes so mad in regards to the stock, because they're looking and they're like, come on, man, $100 billion market cap. The company's going to do $3 billion of revenue or so, right? And so they're looking at it and they're like, my gosh, it's just so expensive. You look at a forward P, it's over 100 now at this point in time, right? And so people are like, gosh, the valuation's so much. But you got to understand, if Palantir is going to grow their revenue if we can assume a 30-35% revenue growth rate over the coming years, and the earnings per share is going to increase at a much faster clip than that, and the net margins are going to be top tier over this next 5 to 10 years, well, guess what? In that sort of situation, Palantir is actually not an expensive stock here, right? Now, if Palantir only grows revenues 15 to 20%, yeah, it's going to be dead money for several years. There's no doubt about that. Like Palantir revenue growth of 15, 20% a year will be dead money for the next 3 years probably, right? But assuming they are that company, which if you're that company, you're going to start growing revenues 30% plus clips, they're still a buy, even here, which is crazy, right? Hey, I want to thank you so much for watching that clip here today. I hope you really enjoyed that one. What you're looking at right now is 1000xstocks.com. 1000x does not just show you a billion different metrics that are completely irrelevant. It's curated, mandatory metrics, advanced metrics, curated for long-term investors, not for traders, so you can understand a company on the highest level possible, how it operates, and most importantly, making judgments on whether you want to invest capital into a company or not. Understanding the upside, the downside with companies. Is that company worth our investments, or shall we keep our hands away? So how you can access 1000xstocks.com is you can go to the description area of this video, or you can go to 1000xstocks.com, apply for access to the service. Let's get into this.
CEO Shyam Sankar, it's great to have you. Welcome back.
Thank you for having me. It's great to be back.
So what is driving all this demand?
Well, it's unquestionable that this is a unique moment for Palantir here. We have the tailwinds in the commercial business, the rate of adoption of AI, the normative view that enterprise automation is where the value is, and the tool chain. You could say, it's a 10-year overnight success. The foundational investments that we've made in ontology are the prerequisites that you need to put these workflows into production quickly, to get from a charismatic prototype to actual business value. I would say one of our customers, a very large U.S. insurance company, we've automated all of insurance underwriting. A process that used to take 2 weeks can now be done in 3 hours with a 78 agent AI model. And you can think about that as not just the time saved, which is the first order benefit, but the second order benefit is if all of your competitors take 2 weeks to price risk and you take 3 hours, it's going to be a fundamental dislocation in the market.
I was just going to ask, because
that's what's huge with Palantir, and it's so important people understand this, is now, let's say you're a competitor, like he points out here, right? you have to get Palantir as well, or you're going to be left behind. And so that's a beautiful thing with Palantir. As more and more companies adopt it in more industries, those competing companies, they're going to have to start taking this serious and be like, I think we need to get Palantir as well.
Going after enterprise, and Google and Microsoft, they're all going after these enterprise systems for changing how corporations operate and getting them more productive and efficient. So what do you do that they can't?
Well, I think what the market realizes is nobody wants to be on the self-driving car journey. We had a prototype self-driving car in 2005. It drove 120 miles through the desert. 20 years later, we have commercial service in 3 cities. That's not a rewarding journey. So all the value is going to accrete to the companies who have built the tool chain that allows you to get to production quickly. And we've spent the better part of a decade building exactly that.
Although the self-driving thing has a lot of friction from regulation and making sure it's safe, right?
And so insurance is a very regulated industry. Hospitals are very regulated. We manage 21% of hospital beds in the U.S. I think, if you want to solve the whole problem, you have to be able to solve the whole problem and provide the regulators the transparency, the assurance, the telemetry and observability they need to say, yes, this model can be in production. This workflow can be AI enabled.
Do you think geopolitics and global friction is the Palantir story? To what degree is that part of the mix right now, would you say?
Well, I think it's certainly part of the mix overall, where you have this. You have cultural differences. I'd say Europe is looking kind of like deer in headlights. They're trying to think their way through the AI problem. And if there's anything about AI, it is fundamentally experiential. You cannot think your way through it. If you're paying consultants to help you to think about how to deploy it, you're just lighting money on fire. You have got to roll up your sleeves and get busy implementing it. And that is a unique strength of the American commercial markets. You see American companies reacting in exactly that way. And it's a big part of why I think America is outpacing the rest of the world in terms of adoption and the value it's creating from AI.
Well, and is it more affordable? Because a few years ago, it was thought to be high price point for governments and for companies, and that's limited adoption.
Well, it's more effective. You kind of get what you pay for, and certainly people view us as a premium product, but when you get results in weeks instead of years, it's clearly worth it.
What about what Carl mentioned on the military side of things?
So, and this is what I always point out in regards to Palantir, because that is a subject that gets brought up quite often, is, wow, Palantir is a very expensive product. These deals are usually millions of dollars, if not tens of millions of dollars. Sometimes it can be even up to 9 figures, right? And so there's kind of a case of Palantir is so expensive. Are these companies really going to pay up? And like I always say, very important, everybody understands this. At the end of the day, if you spend $20 million a year with Palantir, you're a large company, okay? You spend $20 million a year with Palantir, huge number, massive. All that matters is that Palantir gives you back more than $20 million of value. That's all that matters. And so if Palantir helps save you $40 million a year in your business, you win, right? If it helps make you an extra $40 million a year, you win. That's all that matters, right? $40 million more efficient, you win. So that's what's key in regards to Palantir. It's not about how much people spend with it. It's about the fact that Palantir is going to save you, make you more efficient by way bigger number than whatever you spend on the product.
That business and the growth rate right now, given the geopolitical backdrop, is going from bad to worse.
Absolutely. I mean, you can look at the current events in the Middle East, but I think if you zoom out a little bit, we are, as America, in an undeclared state of emergency. We have, a year ago, we had a pogrom in Israel where 1,200 people were slaughtered. We've had over 100 attacks on U.S. bases from Iran. We have unprecedented phase 0 and gray zone operations in the South China Sea from the CCP. And we have 1 million casualties in Ukraine. And these are not disconnected events. There is an axis of authoritarians who have lined up to counter Western and American interests here, and we have to rise to that occasion. A big part of that is not just the work we do with the military, AI enabling the kill chain to drive deterrence, to scare the bejesus out of our enemies, but also to reindustrialize America. If we're really going to deter World War III, we have to be able to make things. A lot of the lessons from Ukraine, we spent 10 years of munitions, 10 years of production of munitions in 10 weeks. That is a clarion call to refire up the arsenal of democracy so that we can actually deter great power conflict that might be coming.
Okay, so the moral of the story is it sounds like demand is absolutely stellar. The big question is, what are growth rates coming in at this quarter? They're going to be reporting in a matter of, how long until they report the next quarter? That's going to probably be a month from now or so, maybe a month and a half. The biggest question is, are they going to hit a 30% number or not, right? A lot of people are kind of expecting 24 to 26% range. Last quarter was 27%, and the big question is, are they going to hit a 30% number? I discussed this very in detail on the main channel 2 days ago. So if you didn't see my Palantir video, check out the main channel. I posted one 2 days ago. It was like a 30-minute video that went super in depth in regards to Palantir, growth rates, how everything changes based upon, where growth rates are going to be at, all those sorts of things. Hey, I want to thank you so much for watching that clip here today. I hope you really enjoyed that one. What you're looking at right now is 1000xstocks.com. 1000x does not just show you a billion different metrics that are completely irrelevant. It's curated, mandatory metrics, advanced metrics, curated for long-term investors, not for traders, so you can understand a company on the highest level possible, how it operates, and most importantly, making judgments on whether you want to invest capital into a company or not. Understanding the upside, the downside with companies. Is that company worth our investments, or shall we keep our hands away? So how you can access 1000xstocks.com is you can go to the description area of this video, or you can go to 1000xstocks.com, apply for access to the service. SoFi Technologies. SoFi Technologies, $8 stock. It is up about 10% in the past year. I call it Thomas the Train That Could. The train that could. So, SoFi is what I would call a new age bank. Okay, new age bank with a tech platform as well. Now, when it comes to SoFi, this company has a very small market capitalization. And when we think about the big giants of the banking space, these companies are massive. JP Morgan, $600 billion plus valuation. Bank of America, $300 plus billion valuation. Wells Fargo, around $200 billion. Morgan Stanley, $176 billion. HSBC Bank, $166 billion market cap. Goldman Sachs, $159. And you might got to say, how did these guys become so massive? Well, they became so massive because they attracted the previous generations. Guess who's, got the most wealth out there? It's the baby boomer generation. And guess who the baby boomer generation banks with? These guys, JP Morgan, Bank of America, Wells Fargo, Morgan Stanley, Goldman Sachs, that's who they got their money with, right? And so they attracted the baby boomer generation and some of the other older generations, and those folks use these banks, and that's how these guys became so massive over time. Because they're all these folks have loans through them, they have assets under management, all that stuff. And then they were able to buy out other banks over time as well, right? They were able to stay afloat throughout all these situations. Well, SoFi's this little guy. They're $9 billion market cap, which is nothing compared to these guys. $600 billion, $300 billion, $9 billion market cap, it's nothing. But SoFi's the little guy that's sneaking up on everybody right now. And these guys are honestly so big that they don't even really notice SoFi. Like, SoFi is just a little fly out there right now. They're just a little fly. I think 5, 10, 15 years from now, they're all going to recognize SoFi, but by that time, it's going to be far too late. But for right now, they don't even really care. But meanwhile, SoFi's snapping up customers left and right. Look at how many members SoFi had, members, customers, whatever term you want to use for them. They had a little over 1 million just a few years ago. Now they're pushing 9 million. They're going to be 10 million members plus. Very, very soon here, probably next year at some point in time, right? And there's honestly nothing anybody can do to really stop these guys right now. They just continue to attract more and more customers, more and more customers. Now, look at Galileo accounts. This is more when you're thinking about their tech side of their business. Galileo accounts, all-time high here recently as well. So their traditional, more banking business, I would call it, is attracting more and more members, and then Galileo continues to attract more and more folks as well, which is phenomenal to see. Now, when it comes to their most recent guidance, they guided for 625 mil of revenue to 645, which would be 18 to 22% growth. I wouldn't be surprised if they beat those numbers. GAAP, generally accepted accounting principles, GAAP net income of 40 mil to 45 mil on this company as well. I would not be surprised if they beat that number as well when it comes to this next quarter. So their financials are now in a great place for this company. Now, the traditional banks, right, those ones we talked about before, the JP Morgans, Wells Fargo, Bank of America, all those guys, they did an amazing job grabbing these generations, the builders generation, baby boomers, Gen X, right? And those folks, the far majority of them bank with these traditional banks. But SoFi is grabbing more of the millennials, the younger millennials, the Gen Z, they're grabbing those folks, and they're in the best position of any bank out there, in my opinion, to grab Gen Alpha. As those folks age, start entering the workforce, get their first jobs, which is very important. You capture folks when they're getting their first job or two, because many times, whatever bank they start out with, they're going to keep that bank long term, as long as they have a good relationship there. So when I think about SoFi, they're attracting the generation that maybe doesn't have the most money right now, but will have a lot of money 10, 20, 30, 40 years from now, right? Just like these baby boomers, they weren't always loaded. They weren't always rich, right? People talk about how much wealth the baby boomers had. They didn't always have all that money, right? But they got all that money over the last 30, 40 years. So when you're thinking about Gen Z, yeah, they might not have much money now. Talk to me in 10 years from now. Talk to me in 15, 20, 30 years from now. And I bet you those Gen Z folks are going to have a whole lot of money. Whole lot of money. Because also remember, when generations, you don't last forever on this planet if you didn't know that, okay? Eventually you got to go, and you can't take your money with you. Your money stays. So what happens to all the money? Well, the money gets funneled from, folks that pass on to their family members, and then their family members have that money. And if their family members have SoFi, that money's going to SoFi, right? So this is very important. Everybody understands kind of the demographics here, life, how it works, how money flows, all those sorts of things. Very, very important. Everybody understands that, okay? Now, additionally, when it comes to these traditional banks, there's such a disadvantage over the next 10 to 20 years, in my opinion. Major disadvantage. And the reason being is they have all these physical branches. Very costly to run all these physical branches, right? You have to have all the bankers and all the employees of those branches and the ATMs, and it's a very costly ordeal. And you have to keep the places looking decent. And just ask the pharmacy chains, CVS, Walgreens, ask those guys, Rite Aid, how fun it is to run physical locations in this day and age where we're going digital. They'll tell you it's not very fun. That same play out, in my opinion, is going to happen over this next 10 to 20 years. But the worst part for these guys is there's nothing they can do about it. They can't ditch the physical locations. Like, could Chase just say, we're going to shut down all physical locations? No, because their customer base is going to have a flippin' flapjack and heart attack if that happens. Are you kidding me? You got you got somebody that's born in, 1944, and you're going to tell them they can't go to the physical location anymore? You got somebody born in 1955, and you're going to tell them, oh, sorry, you can't go to our Wells Fargo location anymore. No, come on, man. You got somebody born in 1969, you say, you know what? It's the summer of 69, but you can't go to Bank of America anymore. Come on, you can't do that, right? So these folks, they can't ditch them. They're stuck with these massive, costly branches, and they're stuck with them for the next 10, 20 years. Meanwhile, SoFi, they don't have that issue. So SoFi is going to emerge very, very profitable in the end because they don't have to deal with all this crap, all the logistics of that and whatnot, right? Now, additionally, when it comes to SoFi, look at the trailing 12-month. We're looking at 1000xstocks.com here, right? Look at their trailing 12-month revenue of this company. Boop, 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 boop. It's one of those very few companies you can just count on growing quarter in, quarter out in a tough environment, too. That's the other phenomenal thing I'll point out in just a moment for you guys. Additionally, shareholder equity is one of the most important metrics you can look at when you're trying to judge a bank, right? And remember, SoFi is more than a bank. They're also tech, right? So that is something to keep in mind. But if you want to put them more in the banking space, shareholder equity is very important, and they're up to nearly $6 billion ish of shareholder equity versus go back a few years ago they were under $3 billion for that line item. Now their CEO Anthony Noto, oh my gosh, has he done a heck of a job running this company? Anthony Noto, he's the CEO of SoFi, been for several years now. He used to be the CEO of Twitter back in the day. And before that, he was a managing director at Goldman Sachs. He used to be the chief financial officer of the NFL. So this man, obviously, very impressive resume. Like one of the most impressive resumes you're going to find out there. But you're going to think about what he's led this company through. He led them through Rona, right? The shutdowns, everything that happened there. He led them through the highest inflation we've seen in many, many decades. He led this through a student loan pause, which substantially affected the company because they had a lot of student loans, and all of a sudden, the government said, hey, you know what? You don't need to pay your student loans back for a few years. We're going to put that on pause. That very negatively affected this company. Like some companies would go out of business in that sort of situation. Anthony Noto navigated the company through that mess. Then we can talk about interest rates. Interest rates went to the highest they've been in many decades. And even through that, Anthony Noto led the company through all these messes. Mess after mess after mess after mess after mess. And Anthony Noto led the company through all of this to make it out to the other side and emerge stronger than ever. It's not like we're getting a SoFi that's been very weakened and very hurt by all this. No, he's led them through all these messes. And SoFi today, I can tell you, is the strongest I've ever seen SoFi in regards to their business model, in regards to their financials. It's the strongest it's ever been. That's incredible. Incredible. So if there's a man, you want to kind of say that might be worth betting on over the next 10 years, I think Anthony Noto's pretty dang high up there. And he's 56, so if he wants to lead this company for at least another decade, he's got it. If he wants to, that's up to him. But man, I'm very, very impressed. Honestly, we know Jamie Dimon is going to be retiring likely in the next, it looks like probably in the next 1 to 2 years, Jamie Dimon is going to be going bye-bye, which he is a legend of the banking space right now. He's the one everybody looks at. The mantle is going to be open. The mantle is going to be open very shortly. And somebody's going to take that mantle and become the guy in the banking space, the guy that everybody's looking at, the guy that CNBC wants to talk to, Bloomberg wants to talk to, Fox Business wants to talk to, everybody wants to do interviews with him, get their perspective on. Jamie Dimon, like I said, next 1 to 2 years, he's likely going bye-bye. And so who's going to grab that mantle? I think Anthony Noto's in a phenomenal place to grab that mantle, which is going to be a huge opportunity there. And so, I already see him kind of positioning for that potential with him making the connections with the big media and whatnot. So we'll see what happens there. But I think he's up. I think he might be up next. Okay. Now, SoFi, right? $9 billion market cap here today. This company, I see this company over the next decade becoming a giant. I see them becoming a giant. We'll have to get through a big unemployment recession at some point in time. That'll be what we have to get through. Anthony Noto seems like the type of guy that's not going to risk the farm. In regards to this company, he seems very disciplined and to understand that this is a long-term game he's playing, and this is for legendary status. I mean, he grows SoFi into a big dog bank, like that's legendary status. And if he becomes the guy in the banking space that everybody's looking to for guidance, like that's legendary stuff. So I think he's playing for legendary stuff here, and I think there's a lot of opportunity here in SoFi over time. Now, SoFi, to show you how much I believe in this company and what's going on here with the financials, it's one of only 15 stocks I own in the $2.5 million public account. That's a big deal. That's a big deal. To get into that portfolio is a big deal. And so it is a position I own in that portfolio, and I wouldn't be surprised if I build it a little bigger and take myself to maybe 5,000 shares or so in this one.